all. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Monday, the 27th of January, 2025, about 6:35 p.m. Central Time. Thanks for joining me. Interesting day. As you know, the stock market came unglued today. One of the largest breaks we've seen in the S&P recently, the biggest break of this year for sure. And due to the fact that there's a product called DeepSeek that China has developed, and I'll go into that in the financial update. I'm not going to do it here. Here we'll stick with what we've got on the metals. That way I don't have to repeat it each time. You're going to get reports in the morning, the monthly durable goods. That comes out at 7:30. Redbook Group weekly retail sales. That'll come out at 7:55. The Case-Shiller November home prices for the 20 metro market at 8 o'clock in the morning. Richmond Fed monthly manufacturing sector numbers. That'll be at 9. And you get the Conference Board numbers also coming out at 9 o'clock. So there's a lot of data there. And then come Wednesday, you're going to get the U.S. Federal Reserve giving us their monetary policy decision, the Bank of England on Wednesday, and on Thursday, the European Central Bank, all monetary policy decisions. The market widely expects the Federal Reserve will sit pat at this meeting, leave the door open for a March meeting. That'll be argued about depending on how the data comes in between now and early March. So there's plenty of data between now and then. You know, people will talk about, does the Fed dare raise interest rates? Well, first off, they don't dare to worry about anything. They're independent. The second thing is, why do they have to raise interest rates? That'll become the next question. Or why do they have to cut them? The data will do that. But I would expect that the Fed chair keeps the door wide open on a March, June possibility for cuts if needed. All right? Let's go to the market. If you look at the gold market, we finally got a correction. We're down for the week 1.18%. Now, that's a little bit of a bounce because the market is up tonight a little bit. You're up about $8 from where you went. What the market did is it broke the pattern for the time being of consistent higher lows, higher highs. The market pulled back. It hasn't gone to the 18-day average. That bigger support's waiting at 27.40.40. What stopped the market was getting up to the upper Bollinger Band on Friday. And I know there's groups of you that don't believe in Bollinger Bands. I do. So whatever you believe in, that's wonderful. But I have learned over the years, and I didn't know it. I learned Bollinger Bands in the past, decade or so to really use them and tie them together with momentum, which I do right here. And you today ended up, as you can see, you were fine. Now, I want to come back one more day if I could. There we go, Friday. You had these numbers way up at the 90 level. It's unusual to lose the embedded reading in one day from those numbers. I mean, you can count it on a hand in the course of the year. Yet that's what the market did. It got a 78 reading. Tonight you're down to a 72 reading. So the odds do favor that if prices can't pick themselves up, you might have to regroup closer to that 18-day average of closes. If you had a monster rally tomorrow, then and you lift the red line back, closing over 80, it would be re-embedded again. That would take a huge rally. I'm not saying it can't happen. It's not a probable action. That's the way to say it. The gold-silver ratio continues to move higher, up to 90.74, near the highs that it's recently been. So you're in a resistance area, but there's no sign yet that that market is backing off from there. And the reason is the industrial metals are still looking at China in a large way. And the news out of China, if you're reading about it, and I write about it as soon as it comes out in my newsletters, and I pointed out this morning how the news was bad. Now, we have the Lunar New Year just about to descend on us. And when it does, the Chinese take off a week. When they come back, they look and try to catch up to whatever the markets were doing. I wouldn't trust the markets this time around. I think that it could be bad news for China, not good news. We'll see if I'm right or wrong on that. And the reason is they haven't done anything to improve the economy that the market is showing. So we will see what goes on. Lower highs, lower lows. Resistance now begins at the 18-day, then the 100 up to the right through here. the gray line's the 200, then up to the 100 in green all the way up here. But this market's still very much in the bear camp, not the bull camp. There is no camp in copper. You have a higher high, lower low pattern. If you'll recall, I said that as the market fell back to the 18-day average, you're going to have two layers of resistance. I said that on Wednesday and Thursday, and you did. And the market has since then fallen back down. There is no trend. It seems to be stuck at the 18-day average of closes temporarily. When we look at the platinum market, it's similar. It's trading in between the 18-day average and the 100-day average in green, back and forth, void of a trend with a higher high, lower and low pattern. And the US dollar has come down, to my surprise, frankly, or not. No. If you'll recall, when I did my metal report, I thought the market would do this exact churn from up to down, and now the game begins. Now, if it's going to come alive, it comes alive at the expense of some of the currency may be surprising us with bigger rate cuts than the market thought, weaker economies than we thought. We'll see. Should the dollar be falling on this news? So far, I'm not seeing anything that is bearish the dollar other than the chart. The chart action is bearish. I don't fight charts. In fact, I'd rather cover the name of the chart and just trade it. Is the market screaming, sell me here? It is not. Is the market oversold? It is. So you've come down, and now the market has to decide what next. If you should clear here, the 108.36 level, you negate the downtrend. But until that occurs, you're in a downtrend, but you're very oversold. You put that together and you try to come up with game plans. And, you have to watch tonight because we don't know what we're going to walk into in the morning. Are we going to get another leg to the downside, or does this wear itself out and the market comes about and does what I'll talk about as I get into my financial update, which I'll do right after this one. I do want to remind you, this is the perfect time for you to get all the news that we have. We're writing on this. We're writing on the impact on the meat markets, the grain markets, the soft markets, what's going on there. Then, of course, this is the time frame where I tell traders, you step back right in front of the Fed. Why do you want to fight with whatever's going to happen or not happen? Let it occur, and then you start fresh. So if you were to ask me, hi, Ira, where's a good time to start? I want to get involved in this next leg. It's right in front of us. How's Thursday, Friday? Okay, that's what I think in looking at a lot of this right now. All you have to do is go to iraepstein.com, free offers, take a look there. If you want to trade with us, you'll see that on our website. Our account forms are in the top right. Just give it a click, set yourself up, and away you go. I'm Ira Epstein. You have yourself a great evening. I'll see you all first thing in the morning.